Hey guys, it's Athena here again from Pearl Lemon Accountants, and today I'm going to teach you one of the underlying assumptions of accounting, which is the concept of separate entity. By the way, if you need any accounting support, feel free to head over to pearllemonaccountants.com and we'll get in touch with you. Let's begin. So, what is the concept of separate entity, and how is it an accounting assumption? An accounting underlying assumption means that this is something that's already recognized as truth to standardly to all businesses, to all business transactions. And one of these concepts is the concept of separate entity. It means that when you're doing any accounting work, you're already going to assume that this concept is true and it will always be true in the subject of accounting. So, what does it mean? Separate entity means that one should always separately record the transactions of a business and its owners. Let's break it down. There are two important concepts in this definition. First is to separately record, and the second is that the transactions of a business and its owners are separately recorded. Going back to the word itself, separate entity. It means the entities are two different things. For example, let's say we have ABC Company, which is owned by an owner called John. The concept of separate entity assumes and silently states that all the financial transactions of ABC Company should always be recorded separately from all of the financial transactions of John, its owner. For example, if the company, ABC Company, bought an asset, which is a car, for example, it shouldn't be mixed with the transactions of John because it's the money of the company that was used and it's the company that will be using that car. And another example on the counterpart of John was, for example, if he bought a laptop for himself. That transaction should only be recorded on his own financial records because it will be for his personal use and it won't be for the use of the company, and the money of the company wasn't used. Another concept here should be that the money of the company shouldn't be used for the personal use of John, and that the money of John shouldn't be used for the use of the company unless it was directly invested. So that is really the concept of separate entity. I hope you're able to understand it. Once again, if you need any accounting services for your company, simply head over to pearllemonaccountants.com.